Hey folks, Dan Frio here. We're talking today Stock Talk Tuesday. And the reason why I'm doing this today is you see huge market volatilities in the markets right now. There's up 1,000 points up one day, 1,000 points down one day. And a lot of people were just doing the wrong things. And I used to do that when I was younger, a young investor too. So we're going to talk about in today's video or the patterns that you most likely are going to follow if you're a young investor. If you're not a young investor, what instruments would I recommend if I'm investing? If I'm a young investor, a new investor, what I'd be doing in this market? So that's what we're going to talk about in today's report. So my name is Dan Frio. I try to help you guys understand the markets and why it's doing what it's doing. So today we're going to talk Berkshire Hathaway. So the reason why I do this video is, like I said, in my videos that I have many times down at the bottom, I'll have descriptions of people saying, they can't afford to buy a house and they don't know what to do and things like that. So I've decided I'd come out and do a live event and explain to people, what I recommend to people investing, and especially young adults, to learn from the mistakes that I made. So let's get over to what we're going to talk about. So right now, we created a stock portfolio a few months ago, back in September, I think it was, and I'm going to go through all these holdings with you. And this is just a small little portfolio we put together, and I just want you to understand, what these are and how to invest. And the reason why I'm doing this is I'm not a stock and I'm not a trader. So don't reach out to me for trading advice. I'm not a financial planner. I'm nothing of that. What I want to do is just share my experience with you guys. So here's the typical pattern, and I saw a pattern like this on LinkedIn earlier today, and that's what prompted me to do this video. So what it was showing is in how investors invest and when they invest. So this is kind of a pattern that you see. You could see this in stocks. You can see this in the housing market that we had a couple of years ago. You can see this in Bitcoin, cryptocurrencies, and things like that. So here's what the normal investor does, and I was a culprit of this years ago as well. So you go in and you want to invest in something. Okay, again, this could be a house, stock, Bitcoin, whatever. So you follow the market and you get excited and you're like, okay, I'm going to buy this thing, but I need to do some research, but I'm continuing to watch and get all excited about this. And then I finally, at some point I buy and I'm like, okay, I'm going to buy my stock. Then the stock starts to drop. Okay, so what happens is then you're like, okay, what's going to happen to this thing? Oh man, it's not going to go down any further. Well, it can't go any further. Then you get to desperation. Then you get all the way down to here, and then you're like, okay, I'm out. I got to get out of this thing. Then you sell. Okay, so then you start seeing things through here, and then it goes back up through. Okay, maybe this, and the chart that I was showing you is kind of a simulation of what happened last week or the week before. We had on Monday, the Dow Jones was down 900 points. Then on Tuesday, it was up 1,000 points. Then the next day, it was up 1,000 points. And you can see where people are probably like, okay, I'm going to sell, I'm going to buy, I'm going to sell, I'm going to buy. But what happens most of the time is this pattern right through here. So I want to give you some advice or just what I would invest in this market and the whys behind it. So we're going to go over to this portfolio that we created just recently. But first, let's go over to the Dow Jones and basically CNBC. This is what you're seeing in the equity markets today. All right. So if you're new to investing, this is the Dow Jones, the S&P 500, the NASDAQ, and the Russell. This VIX here, and we talk about it daily on my channel, but what this is basically you just have to understand this as being the anxiety level on Wall Street. I'll put it that way. So the higher this number is, above 10, the more anxious it is. So if you see this number getting into 30s and 40s, somebody just sneezing on Wall Street can have it crash. Okay, so that's what you have to really watch a lot of these indices. Okay, the tariff things are throwing everything on its ear right now, so it's hard to really invest and focus in on the market, especially with the fundamentals with a lot of things. So what I try a lot of times is to help you understand how to research a company. Today, I'm going to take all that away from you. I'm going to say if there's one investment, and I don't care if you can put away $25 a paycheck or $10,000 a paycheck, the one investment that I would make is in Berkshire Hathaway. Okay, so you might have heard about Warren Buffett. Warren Buffett is the grand poobah of investing. If you think of investing or just Google it, probably Warren Buffett is going to be on the top of the heap when it comes to there. So what we want to talk about is what does he invest in, or how do you even focus in on what he's doing? So what I wanted to show you right through here is through ChatGPT. I created this system right here, and it's going to talk to us a little bit about Berkshire Hathaway, what it is, what it does, how do you can invest in, and some of the returns it has. So in this market, here's what I'm thinking. Okay, manufacturing. The president wants to bring back manufacturing, so that's probably going to take a nice little rally here. We're going to have energy, hopefully energy dependence. But the bad thing with energy is the more and more they pump, Well, the more prices go down with oil, well, that's not good news for the oil companies because the prices are coming down. So I'm going to say oil prices are going to get in the 60 level, and it might just stay there. But these are all things that's just like you have to focus in on a daily basis. So what is an investment I can just put my money away in and kind of just forget about it? Well, this is it. So if you want to invest in things like, well, this is the Berkshire Hathaway stock. We're just going to do a quick little glimpse through it so you understand what it is, and then we'll kind of dissect its returns and why. I even tell my kids as soon as they're born and get their first birthday money, they're putting it into this stock. So let's get over to it. Here's Berkshire Hathaway. It's a conglomerate. Basically, it owns a bunch of companies, but it's actually a stock. Here's what the stock has done today. Okay, so I think this is today. Yeah, it's up 0.54 today, so $2 a share. If you go over to here, here's basically what it does. Berkshire Hathaway is a diversified conglomerate led by Warren Buffett with operations spanning various industries. So the industries they basically are in are these. And you tell me, I'll give you an up or down where I think these industries are going and the whys behind it. Okay. Insurance. This is basically where he made all his money, and he's been doing this, I think, since the 50s or 60s. So this is what's created huge returns for them over the years. And they've been able to take the premiums and the profits from the insurance business and move it over to these other industries. So let's break them down. Freight and transportation. Well, if you're looking for a robust manufacturing industry in this country, maybe this is the heed for that. But the problem we're facing right now, and I'll just kind of throw it out there. You have this huge fight between America and China. Okay, and I've been a proponent of this since I was a teenager. When I started seeing the steel mills in the community I grew up in basically going under and turning into ghost towns, I was like, this isn't good for our economy, this isn't good for our country, and this isn't good for our defense. Because what was happening at the time, China was dumping steel on the United States and just putting all the manufacturers out of business. Detroit, all the automakers out of business. Steel mills, well, we have Nucor Steel, which is a mini mill, and that's about all the steel industries we have in the United States. So do we need manufacturing in this country? Well, let me answer it this way, and this might be a contrarian way that a lot of people look at this. In our country, we have, and it's even out there, we have the haves and the have-nots. We have those that have the money, and those are the kind of the worker bees. Let's just assume here's what happened with our country. Back in the 70s, 60s, 70s, and 80s, when manufacturing started moving all over the country, just look up a presidential debate with Perot. It was in 1975. There was a man called Perot. He was running for president. And he said, if all these tariffs and everything go into place, you're going to see a big suction sound out of the United States going straight to Mexico. You're going to have manufacturing just dumping out to Mexico and Canada and all over the country because we need cheap stuff. Okay? And that's what us as Americans, we use. So China then became basically our manufacturing base throughout the whole world, basically. So if you look at a country that has upper class, middle class, and lower class, the middle classes are usually the manufacturing workers and the so forth. The white collar workers are up the top, and then you have the servicing related, I guess, people at the bottom. So if you take manufacturing and you move that all over the world, well, we're going to be left with more diversity on the have and have-nots. So, will this bring back a lot of the manufacturing? Well, we're going to have the labor forces to be able to handle the business, and will the U.S. labor forces take the wages that's needed? Because, you hear all these ramifications about prices going up and inflation going up, and well, as consumers, we want the lowest prices for things, but as employees and employers, we want to make the most amount of money. It kind of can't work it both ways. So that's kind of the disconnect that we're seeing right now in the country and the world, and that's basically my take on what's going on. So right now we have a servicing related industry in our country or people, and then we have people in the upper. We're missing a lot of the middle class in this. So that's my rant on what's going on behind the scenes. So if you want to bring back the manufacturing and everything else, that's going to play a role right into Berkshire Hathaway. You have utilities and energy, okay, which goes from natural gas, which is huge. We have probably the most natural gas in the whole world. We need to be able to utilize that.
Coal's coming back, and you might be a proponent or not a proponent of coal. I'm from West Virginia, so you get my take on that. Wind, I don't know where that's going. I don't know enough about these things, but the one area I think we should focus in on more and more is nuclear. That's one area, but that's my take on it. Then you look at manufacturing. They're going to go over things like boxed chocolates, specialty metal or chemicals, metal cutting, aerospace, power generators, flooring, insulation, roofing, things, retail services, automotive, furniture, bedding, household. They basically run the gamut. If you think of a company, my son works he's an engineer for a company, and it's owned by Berkshire Hathaway. So I never even knew that until just a couple years ago. So then we go down through here, the investment portfolio. So what does this invest in? So if you're investing in Berkshire Hathaway, I just went through, well, they own companies and things in insurance and freight, but what do they really own? Well, they own these stocks. So if you're even looking to buy into these stocks, Apple, so you have Apple, it's kind of scary times right now with all the tariffs and everything else. American Express, they're doing pretty well right now. Coca-Cola just came out with their earnings. They came in really good. Bank of America's earnings are going to get better as the yield spreads change. And then we have Chevron. That's going to be completely dependent on the energy sector. So this is all this. So you're buying these companies. So if you're buying Berkshire Hathaway, you're getting pieces of all these companies and much, much, much more. So that's why I invest in it. So now, how does it do over time? Well, let's see if these investments are what you're returning on anything that you're owning at this time. So let's get over here. 1 year return, last year it returned 26.5%. Your CD might have got you 5. Something else might have got you some more, but how about right through here? Okay, look at the 3-year turn, 56% returns in 3 years. There's a rule, what's called Rule of 72. What the Rule of 72 is if you factor in anything that denominates into 72, it's doubling your money. So let's say it this way. If you're getting a 10% return on your money, every 7.2 years, you're going to double your money. Okay, so the Rule 72. If you're looking at this, well, you're doing pretty darn well. Every 5 years, you've tripled your money or something like that. So fantastic investment. Now, will these continue? Probably not, but it could. You go over a 10-year time frame, you'd have a 252% on your money. Okay, pretty darn good investment. You do that on your house? No. So these are areas where I always say, get into your house, but don't be broke on your home. Your home shouldn't be an appreciating asset like this. You shouldn't have a house that goes up 26% in value because you're sitting there high-fiving yourself, but then you're saying, okay, now I'm stuck because I can't afford another house. I can't move higher up the food chain or anything else, so you're stuck. So we can't have houses going up 20% a year. 3, 4, 6, 7%. It's a good rate of return on homes. So if that's what you're looking for, if you want major returns, this is what you're going to look at. If you want major returns, don't look at buying a house to do that for you. So that's what we're seeing right through there. And right in here, investment growth example. If you invested $10,000 in Berkshire Hathaway 10 years ago, it'd be worth $30,000 today. Pretty darn good investment. So let's get over to anybody that Honey Buns, you are back and you are scared once again. I feel so bad. You're scared. Not sure why you're scared, but I love you coming on the channel every day. S House, I've been seeing and I'll just let you know, I don't respond to the comments. And so if you have an email or a comment for me, S House, just email me. I see you're posting a lot in the descriptions in my videos. I apologize. There's so much. I hate looking down there because there's so many people that just call me an idiot and things like that, but they provide no context. So my goal, and the reason why I do this, guys, I'm not a stockbroker. I'm not a financial analyst. I'm not a retirement planner. I got nothing to do with the stock market. I'm just trying to help you guys understand, how to get wealth creation, how to not be poor anymore. So if you're sitting out there saying, oh my God, I'm poor, I'm poor, I'm poor. Well, if you have a little bit of money, you need to get on a budget, first off, get your finances in a row. And then when you start having, that debt's out of your way and you need to start putting money aside, look at Berkshire Hathaway to do that. Now, I'm not telling you to do that. I'm just giving you this is for entertainment and educational purposes. But even maybe before you go out of, get out of debt, set up this, go create an account somewhere. Maybe next week we'll create an account on Charles Schwab. I'll let you know. I'll show you how to do that. And you could just set up where every paycheck, $25 is going over and, dripping into buying you a fraction of the share of this company or something else. And just add it as another one of your bills each month that you're paying. But in this case, it's accumulating in your favor. You're not accumulating more debt. You're actually accumulating assets. So make it a part of your monthly expenses by saving some money. So that's what we're looking at there, and it's a great investment. So let's get over to any other questions that we have. So let's go over to here. My apologies. It's too high. I would not buy into this. There's no dividend. That's your take, but huh? I would not. There's no dividend. Okay, don't buy. I can also that's your kudos, but I'm saying on here, well, if you know, well, let's elaborate on that. We don't have a lot of other people coming on here, so let me ask one more question. The impact of these tariffs will fully be seen in the second quarter. Now, not now yet. I agree with 100% of what you're saying, but what are they going to do? Because that's the question. You don't know it. I don't know it. The Fed doesn't know it. Wall Street doesn't know it. Nobody really knows how much it's going to really affect things. If you start seeing a lot of the inflation numbers that came out recently, they're actually much, much, much better than expected. So when the tariffs do kick in, how hard is, what ramifications is that going to be? And are they really going to kick in? And to the extent that they are currently, that's to be seen. But let's go back to S-House. And I just want to elaborate on this. It's too high. I would not buy this. There's no dividends. Okay, so let's elaborate on that. That's what people have been saying on home prices also for the last 3 or 4 years. They've been waiting on the sidelines, just saying, well, I'm waiting for them to come down. The Berkshire Hathaway, if you looked at the Berkshire Hathaway stock, which you haven't, it did have pullback. And I could show it to you right through here. Well, that's not that. Let's just go over to the Berkshire Hathaway stock. Let's go over to here. So here's what's happening. Here's the stock portfolio that we created. Now, we created this back in September, and I can prove it to you right through here. Here's a stock portfolio we created on Yahoo Finance, and I created it the rate update. Okay, so here's some stocks or ETFs that we purchased, and I'll go through them with you and the returns and what they are. But here, right through here, this is the one that we're talking about today, BRKB. Okay, so let's look at this real quick and just give you some information on that, on kind of like when we bought it and so forth. Oh, come on, let's refresh this. See if I can get down there now. BRKB. Okay, so on 9/9 of 2024, we purchased 1 share of Berkshire Hathaway stock at $459. Today's price, market price today is, we'll go back up. So let's go back up here. And last price, $45. We bought in at, $459 was the price that we paid. $534 is what it is today, for a gain of 16% on our money. Now, I'm not going to really look at the dollar signals because you might have $1 in here or $1 million in here. But look at the return. We had a good return. Okay, so it's year after year after year. So if you're like, okay, this is too high, I don't know what to tell you, because let's just go into its chart. At any point, if you look at this, let's look at a five-year chart. All right, so if you were looking here compared to here, well, but if you were to buy here, for example, and then the market went down here, you'd be saying, okay, it dropped. But over the long haul, I'm saying the long haul. So what I'm saying to do, and maybe this is one of the things that you might not get on this, is you're going to dollar cost average. What I said is every paycheck, put in $10, $20, $30, $40, $50. So you're going to buy. When the market's up, you're going to buy less shares. When the market's down, you're going to buy more shares. But if you look at this pattern over time, there it is. The dividend, who cares? You're getting here's the returns on this thing. 5-year return, 181%. So you're not going to buy that because it doesn't have a dividend. Maybe that's why I'm doing this show, to help me. And I'm not, this is the reason why we're doing this show, is to help you understand these things. So you can't just say, well, there's no dividend, so I'm not going to buy. Well, there kind of is in this. It doesn't pay it directly, but all these companies that it owns, if you go down through here, most of these companies pay dividends. So where's the money going to go? Well, it's going to actually go into Berkshire Hathaway's coffers. And I'll give you an example of that right through here. Let's see how much money. Let's plug it in here. How much? And I'm in Chat GPT. Cash reserves does BRKB have? Let's see if it tells us. And it's billions of dollars. So what happens is they'll accumulate the dividends distributions from those other companies, but what they'll do is they won't pay it out to their shareholders. They're going to take the money, and I agree with them, and use it to what they feel is best. They're going to buy companies, buy in other instruments. I'd rather them keep my money and then distribute it to me, and I just spend it or whatever else. As of December 2024, Berkshire Hathaway has a record of $134.2 billion in cash. So there's your dividends. They don't pay it out because they're managing that money, and I'm all for it. I would allow them to take that money and use it better than I would. So that's my take on it. So didn't want to get into a debate with you, but these are things I love doing this. So if you guys have any comments, I don't mean to bring you out on the forefront. I want you guys to learn and understand from these things. So that was a perfect comment. I'm not going to buy it. It's too high. The dividends, there's always a negative piece. Well, before you even look into it, what kind of returns is it getting? What kind of companies are there? What kind of does it investment? And once you do it, I think you'll be pleasantly surprised. And if you had money in this account, trust me, you wouldn't be selling anytime soon. So let's go to another one that we have. I think we had the tariffs on the impact. So I agree with you on the tariffs. They haven't had any impact yet, but they will have impacts on things. And for you guys watching, I am in the mortgage business, so I follow this every day and with how the ramifications are treating us there. So let's go back to our portfolio. So we're going to go to my portfolio and click it. So I just want to show you, this is from right about election time last year. So you're going to see here's our returns. Here's the returns since those. So let's go here. We got Foodie. This thing is a utility index fund. It's our worst performer. Our gain since we bought it is really nothing. It's 0.74. So that's our kind of a dud. This one pays dividends. Okay, so let's dive into it. On 10/9, we bought this. It basically right at the where we are right now. It really didn't do anything. But if we look into this, let's look into Foodie and see what its dividend is, and then I'll show you an example of this. So if we go to Foodie and we go down through here, the year to date, where is the dividend yield? The yield is right through here, 2.82. So that has a dividend. Would you rather have owned that stock and been up 34%, or would you rather have owned Berkshire Hathaway that pays no dividend and they're up like 50-something%? Just food for thought. Okay, so that's that. So that's why you don't say, well, I'm not buying because it's too high and it doesn't have a dividend. I understand your thoughts there, but there's a lot more to it. We just added this piece of the puzzle not too long ago. This is a steel ETF. So basically it's a basket of steel companies. They manufacture steel. They might be in the iron ore industry and so forth. So let's see when we bought this one. We bought this one just a couple weeks ago on 4/13. We bought it at $56 a share. It's at now $60 a share for a gain of 7.25% in a week. 2 weeks. Not a bad return. And I did that live, we did that on the day that we bought that. I actually did a live event on that one. XLF, that is a mutual fund not a mutual fund, I'm sorry, an ETF. It's a basket of financial stocks. So let's get over there. On that one, we bought on 9/9 of 2024. We bought one share at $44.95. Currently, it's at $48.65 for a gain of 8.23%. And what this is XLF. So I'm going to show you what XLF is. So an ETF is basically very similar to a mutual fund. Now, if you don't know what a mutual fund is, it's basically a basket. You're buying one share of this stock, and you're buying a whole basket of companies, kind of like Berkshire Hathaway. But Berkshire Hathaway is actually a stock, not an ETF. This one is actually an ETF, and I'll show you what it'll go into here. Here's its holdings. So we're in the caption right through here, the financial selector, XLF. It's a basket of financial stocks. Well, ho-de-do. Right through here, Berkshire Hathaway is its number one holding at 13.95%. You're also getting JP Morgan, Visa, MasterCard, Bank of America. So if you buy one share of XLF, you're getting shares of all these companies right through here. Okay, so that's one of the reasons why we picked that one as well. We want the utility because utilities are usually high in dividends. So just like the past person said, we want something with high in dividends. Well, we look at this, and I just thought utilities at the time was a good investment. Utilities are usually kind of a staple. They'll give you some basic returns. If we go to this, let's look at a year to date right now. It is up 0.66. We go a 5-year return. It's up 108%. That's for a utility stock. But see here, they don't go straight up. It's like the housing market. You can't say, but then over here, you can't say, oh man, that thing crashed. Well, no, it's still on an upward trajectory. So that's what we're looking at there. Okay, so let's keep going down through our portfolio, and I just want to explain to you guys what they are and why we bought them. Berkshire Hathaway, that is right through there, and that's that one we just talked about. Now here's the doozy of them all. BITX. We bought it at, let's see on here. When did we buy it? We bought one share on 9/9 at $24 a share. It is at $45 a share. So we almost doubled our money in that position. And you go over here, we are up 88%. So our overall portfolio is up, where is it? 16.4% over the last 6 months. I'll take it. So BITX, that is Bitcoin, but Bitcoin times 2. So every movement that Bitcoin does, this amplifies it up or down. So that's what I invested in. So if you just have play money, if you want to, instead of going to Vegas, spending money going to Vegas, you might want to look at buying BITX as a position in Bitcoin if you think it's going to go higher and higher and higher. So that's that part of it. So let's see. Let's get to my questions here. And we have our 19-year-old spending half of her pay on stocks and Costco shares. Fantastic. She's making $80,000 a year, $1,500 in expenses, setting herself up for this is perfect. And again, I'm doing this just hopefully she can watch this video and just get some ideas on how to understand the markets. Because every day, if you watch CNBC and you watch things like that, you're never going to time the market perfect. You're never going to buy at the ultimate high and sell at the ultimate low. Same thing with housing. I've been in my house for 27 years. It's worth a lot more today than I paid for it. But 2008, 2009, what happened to it? Yeah, it dropped. Did I freak? No, I stayed here, and the house probably doubled since then. So that's why it's timing in the market, the length of time in the market, and in investing, it's all about getting in early, dollar cost averaging, and don't, when you have the blips that you're seeing in the markets, I'm just telling you over experience, don't freak out and panic and sell everything unless you need it. If you need the cash, please set some money aside, maybe to get you 2, 3, 4 months, and then start trickling money in. And it could be as little as $25 a paycheck, $50 a paycheck. When I started having kids, I would put $50 in each one of their accounts every time I got paid, and it would go into Berkshire Hathaway. So those portfolios are pretty nice right now. So let's get over to S House. And S House, please, I'm not picking on you today, but I see you email me and you text me and everything else. I appreciate everything you're doing. And if you need me for anything, please shoot me an email. You got my email address, but let's see what you got. Timing. I have a 401k. I have a bounce back and forth. They only gave about 30 options, none is cash. So it's bonds, then to stocks when they crash, and back to bonds when stocks rise a bit. But like I said, the tough thing you're going to do is moving back and forth and back and forth. But that's the position. That's actually the position that a lot of the professionals do. And I say it on the days when you're starting to see a lot of money just pouring out of the stock market. Trust me, those people aren't just going into cash positions. They're putting their money into some kind of instruments to get some kind of returns on their money and not just kind of throw it into an account. So the reason why I'm doing this is just to let you guys know how to invest. So many people saying, since Trump came in, the world is on fire and everything's loose. This is basically right before the election, and I'm not pro either which way. This isn't a political thing. I'm just showing you, here's what happened. This is steel stocks, utility stocks, financial stocks, Berkshire Hathaway, with everything, and then Bitcoin, and every one of them is up. So the world isn't ending, folks, and so that's what I just want to let you know. So hopefully you find some knowledge with this channel, and it helps you out a little bit. So what I do for a living truly is I'm actually in the mortgage business. But just 2 little promos before I go. CreditScoresandMore.com. If you think you know a bunch about credit and credit scores, please visit my website, CreditScoresandMore.com. I created this thing years ago just to help you guys understand the credit system. Right through here, if you don't use Credit Karma, sign up for this system. It's right here. It's free. It's actually free. Schedule it. Don't buy any of the bells and whistles. I'm just telling you now. I use that system. I don't buy any of the other extra offers. Just use the free version. It's plenty good. But go to CreditScoresandMore.com. There's a whole bunch of information I packed on here, hopefully helping you understand credit and everything else. But what I truly do for a living is I'm actually a mortgage loan officer. Our slogan here is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how do we do that? I'm not going to bore you in this video, but I'm a federally licensed loan officer. That gives me a license with all 50 states as well as Puerto Rico. And the bank that I'm with right now, I joined them because I'm helping them grow. We're now at, I think, 35 lenders. So we keep adding more and more lenders to our arsenal. Why do I concern you with that? What are you looking for most likely when you're trying to reach out to me or anybody else in regards to mortgages is you want to see what the terms are. What's my rate? What's my fees and everything else like that? So what we're trying to do is put that put that on our shoulders. Okay, so what we have right now is, and the reason why I'm here is we're set up with 33 other lenders. So by putting your application in right here, we're going to pull your credit and we're going to shop your loan to all 33 lenders. And I'll be your loan officer throughout this entire process. I can use their rates. I can use their programs. They might have boutique programs like down payment assistance and things like that. I can be able to offer you those as well. So it's just one application, one credit pool. We're in all 50 states as well as Puerto Rico. We have things like DSCR programs, reverse mortgages, debt consolidation loans, all the way down to first-time homebuyer programs and 100% VA purchases and refinances. So if we can help you in any way, please just visit me at therateupdate.com or just watch my videos each day if you're in the real estate market or you're trying to position yourself to either buy or refinance in 2025. Love to be able to help you. So that's my report for today. If you got any other questions, please let me know. Other than that, I'll be back here at the closing bell to let you know how all this ends for the day. So thanks for watching, folks. I hope you found value in my channel. If you did, please, all I ask you to do is give me a thumbs up on the my YouTubes, and that's all I ask of you. Have a blessed day. I'll see you at the closing bell. Take care.